Welcome traders to yet another educational video of Nifty Analysis, episode number 12. In my previous educational video, I had clearly mentioned that if Nifty spot closes above 11,730 for a couple of days, then it could test 11,840, 11,940 and possibly even 12,050. My first two targets were achieved comfortably, but third target, I think so, it just got missed by around 16 points as we saw that Nifty spot made a high of around 12,034. Now in this particular video, what we will be analyzing is the weekly chart first. In the weekly chart, what we can see is that first of all, Nifty has rallied nicely for consecutively 4 to 5 weeks, and it's not just about the trend in the rally, but the time taken to achieve that much of rally. Because if you see properly, friends, then from 11,000 levels, 11,090 levels, we have tested 12,000 very fast. Normally, we don't see such a big movement occurring in Nifty at such a speed. All right. So the first thing which I can see is that market is still in an uptrend in the weekly charts. There is no doubt about that. Only thing which is of concern is that market has gone up very fast on the upside, and the previous week's candle which we can see is a sort of inverted hammer or a shooting star sort of candle, which emphasizes that yes, trend is on the upside, but we can see selling pressure somewhere around 12,000 levels. Apart from that, there is no other negative sign. Now let us go down to a smaller time frame, which is the daily chart. In the daily chart, I guess on 7th November, we just have a small hanging man. And then on 8th November, we have a red candle, which doesn't look like a bearish bell toll, but it is still convincing me that it has comfortably closed below the lows of this hanging man, which is not a very good sign. But the trend is still on the upside, no doubts about that. We can see prices are above this 50 days simple moving average. We are in an uptrend, but possibly we are slightly overstretched because we can see RSI has hit the overbought level. And as I also mentioned in the weekly chart, that we have gone up very fast. We need some sort of consolidation, might be even a correction, and we are also at a resistance point, my friends. You can see this Fibonacci extension coming up, and even this previous high in Nifty, both of these things are coming up in the charts, and they are giving a stiff resistance to the market as of now. So I believe 12,075 in round figure is a very good resistance for the market. Now I will have two opinions over here as a trader, as I always mention in my educational videos, that as a trader you cannot have just one single opinion, because if market does not react the way you want it to react, then you might not be able to make money in the market, and might be you also would take up a wrong trade. All right, you cannot force the market to go as per your own personal view. So what I would suggest is that yes, we are in an uptrend, and again coming back to that point, but we need some sort of consolidation or might be even a correction. So in case if market decides to consolidate first and maybe even go for a correction, then Nifty has to test possibly 11,800, might be even 11,700, which is not a very steep correction. It is a very normal thing, because in a rally of 1,000 points, if we correct by 100 or 200 points, it is not a big deal. All right. So the trend will be up, but we will just be cooling off a little bit. And if the market manages to close above this high and possibly that 12,075 mark, which I just shared in this video, if we close above this 12,075 mark, then possibly we'll have to rethink our strategy as a trader, which I will be sharing it in my next video. All right. So as of now, this is what I have to share from my side. The trend is up, but we need to possibly take a breather, might be even correct by a couple of 100 points. But if Nifty spot manages to close above 12,075, we'll have to recheck the charts and possibly decide about the further levels once again. All right. So in my next video, I'll try to share something even more interesting. Till then, trade wisely.